The U.S. Securities and Exchange Commission is preparing a regulatory framework that could allow tokenized stocks to trade on decentralized finance platforms. According to Bloomberg, the SEC is expected to announce an innovation exemption for tokenized equities this week. This exemption would allow digital tokens representing shares of public companies to be traded on-chain, including tokens issued by third parties without the company's consent. That's a significant shift from the current market structure, where tokenized assets have mostly been confined to regulated exchanges. The exemption could permit crypto-native platforms and DeFi protocols to offer on-chain trading of U.S. equities without requiring full broker-dealer registration in certain cases. However, the framework will include guardrails like exposure limits, disclosure requirements, and conditions tied to the program's temporary nature. For example, platforms that deny token holders voting rights or dividends could lose eligibility under the proposal. Regulators are also reportedly considering restrictions on platforms that omit such rights. This move is part of a broader initiative known as Project Crypto, led by SEC Chair Paul Atkins. Earlier this year, the SEC approved rules allowing 2 national exchanges to list tokenized versions of select equities and ETFs through. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A depository trust company pilot. The new exemption aims to expand that framework, allowing crypto-native venues to experiment with on-chain trading of U.S. equities during a limited period. The implications are significant. If the exemption is adopted, it could open the door for a new kind of market infrastructure where tokenized stocks are traded directly on decentralized platforms. This would allow investors to access public company shares in a more liquid and programmable format, potentially increasing participation in equity markets through blockchain-based systems. However, the framework is still in development and subject to final approval. The SEC has not yet released the full details of the exemption, and it remains unclear how it will be structured or how long the experimental period will last. The agency is also reportedly considering how to balance innovation with investor protection, particularly around transparency and rights for token holders. One of the key uncertainties is how tokenized stocks will interact with existing market rules. For example, will platforms need to comply with traditional market regulations even if they operate on decentralized infrastructure? Will token holders have the same voting and dividend rights as traditional shareholders? These questions will likely shape the final form of the exemption and determine how widely it is adopted. Another area of uncertainty is how this framework will be received by traditional market participants. Some Wall Street firms are already experimenting with tokenized equities, but the broader market may be hesitant to adopt a system that bypasses traditional exchanges and broker-dealer infrastructure. The SEC's exemption could help bridge that gap by creating a regulated environment for on-chain trading. The next signal to watch is the release of the formal exemption by the SEC. Once the framework is announced, market participants will. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Begin evaluating how to comply with the new rules and whether to launch new products under the exemption. The response from exchanges, DeFi protocols, and institutional investors will be a key indicator of how the market adopts this new regulatory approach. In the meantime, the broader trend of equity tokenization is accelerating. The depository trust company pilot has already laid the groundwork for tokenized ETFs and equities, and this new exemption could expand that model to a wider range of market participants. If successful, it could represent a major step toward a more decentralized and programmable financial system.